So welcome to this new video. We had some interesting price actions, so we gonna record a new video. What happened? Yeah, I'm not gonna explain everything again because I think most people have seen my videos. So we had the deviation above, acceptance back under the value area high around there, and then continuation of the sell-off. And then since the start of the year, I've been mentioning that we had that monthly open candle, which was that candle right here, which had no wick to the downside, and it was also put in very early in the 4th hour of the year. And yeah, as we know, we can call that a unfinished candle, aka a candle that is put in unusually early or has no wick. And the market loves to clear those. So that has been a magnet for price to eventually clear out. And yesterday that finally happened, because if we look at the candle of January 1st, let's take this one. Right there, then we can see that yesterday price finally wicked under it, by which that candle has now been fixed from a timing perspective, and it now also has a wick. It's not very big yet, so we can still revisit it at some point. But yeah, good to see that it finally has been taken out. What we should not forget is that below the wick from yesterday, we still have these stacked higher lows. So sooner or later, I still expect price to take that out, including the liquidity, basically from here to there. And then we can have a look how is the volume profile currently looking. Yeah, we also barely friend the value area low. So sooner or later, I think we can make a move into this zone, and that's where I'm interested in bigger relief rallies. And then we can quickly look what is the TPO chart telling us. Currently, we have some daily POCs above us that are not tested, so we have liquidity resting above, which is interesting, but also some poor lows. But the most point of controls are resting above, so sooner or later they will act as magnets for price to gravitate toward. But what's more interesting is to look at the liquidation heat map. So as I've been sharing before, price has been taking quite a lot of that liquidity, but we can see some concentrated volumes still below yesterday's low. As you can see here, around 86 till around 84k. So that perfectly aligns with that liquidity we can see right there. So sooner or later, I'm pretty sure we'll take that. But we can also see that above price, above the highs, more liquidity is also building up. So to me, this is like, yeah, as we said, a clean range, but with liquidity above, with liquidity below. So a lot of good trading opportunities to trade it. So let's zoom in a bit more. What do we have? Yesterday we had this low with the high, so then this was my range. Let's zoom in some more. This was the range with the low right there, the high right there. And then yesterday I made a video as well where I took a short when we deviated the high, came back in. So there I took the short, I took profits in this demand zone because I expected a higher low there, but price nuked right through, right into the range lows. And basically from there, it deviated the range lows and directly pushed up. Very hard to trade because, yeah, you don't often see a move from the range high directly to the range low back to the range high. That's very hard to trade. So, yeah, I will not be too mad about yourself if you did not profited from that. But if you would have traded it, I was looking at, like, here we had some supply, and that supply did not managed to push price lower. So that's what I call a supply, or like a flip zone, because the purpose of this supply is to put in a lower low for price. If a price does not react on it, so supply fails to do its job, which it did here, then you can look at it from supply failure, and then it's like a flip zone, and that's a sign of strength. So there you could have taken a long, anticipating that this would be your range low deviation back to the high right there, for like a nice 2R. But yeah, not super high probability, so I did not take it. So what is the current situation? We deviated the low, we deviated the high, so we can extend our range high to that second point, and you can say this is your tap 1, this is your tap 2. At the lows we also have tap 1, tap 2. Also here it did not go below the deviation threshold, so clean deviation. So we can also extend the range low right there. Can delete this one. This was that yearly and monthly open flip. So current situation is that this is our range, deviation at the lows, deviation at the highs. So right now the question is, what is the next trade I am looking at? We have massive warning signs, because if we look at this daily candle, you can see that there's no wick to the downside. Similar as we have that Monday's open, which is the weekly candle, also still has no wick to the upside. So sooner or later I expect this one to be cleared as well. But since we are now locally very close to this daily candle, I expect that daily candle to be fixed likely today. And then I can show you the stats for that. Here on the past 3 years of data, you can see 94% of the daily lows form after 0000, so it's directly at the daily open. And based on Disney statistics, 100% of the P1s have a bigger wick. So it is very, very likely to at least clear this low before moving upwards. So to me, that tells me a few things. What I see is that we on the 4 hour have a crazy wick. Oftentimes they get filled for at least 50%. So let's look at where is our 50% level. Right there. No, okay, that's the 50% level, likely to be cleared. Do we have some demand levels? Not there. I believe we have on the 15. We have this move where that flip zone was, and then we had that bullish expansion. So this is demand. I like to mark out. And we can see that's also right under that 0.5 retracement of that 4 hour wick fill. This is the daily candle that needs to be fixed. So a few plays that I am looking at is that if we first come up before taking that daily low, then I'm looking for short triggers, potentially play a redistribution here to clear that low, look at this demand, and potentially back to the range lows. Because high time frame, we are still in a downtrend. Liquidity is resting lower. Technical target of that PO3 is also lower. So yeah, if we get short trigger, I'm still interested in shorts right there. However, I have also long PYs, which the first one is if we very locally, you can say you are trending up from here, where this is your range high, this is your range low, this is your sweep. So they can say this is your tap 1, tap 2. And then if we are truly bullish, I'm looking for that daily candle fix, which is right there in confluence with that with the range low third tap, which have 1, 2, 3. If you flip structure there, can look for long. But yeah, it's very tight. But what I like is that the price is building up some buy side liquidity here. So this is my first long PY. If we first go up, I'm interested in shorts as explained. But the more likely and higher probability plays will be lower in the range. First is this demand I mentioned, that 15-minute demand block left behind yesterday. We can watch what is the volume profile. Yeah, so that's also around the value area low, and probably also around your FIB retracement levels. Let's look. Yeah, so this could be either your model 2, in which this is your tap 1, this is your tap 2, price comes back, forms the tap 3, break structure back to bullish, play the 1, 2, 3. So this is definitely a area of massive interest for longs for me. And what could also happen is that because sell side liquidity is resting below the current low, especially this liquidity curve, and if we look at the current range deviation threshold, it's right here. So what I'm also keeping an eye on is that what could happen is that we potentially get that 1, 2, 3 distribution model 1, price comes back, hits technical target, that flows over into a 1, 2, 3 after it took most of that sell side liquidity, and then get that bullish relief rally higher up. So a few different outcomes I'm looking at. Yeah, for now I would like to see the daily candle get cleared. If we don't clear that daily candle, I'm more interested in shorts. If we clear the daily candle, break structure, push up, then and push above the range right here, then I think we can clear that weekly candle, retest these levels. But yeah, it's all dependent on what the price action is. Also this morning I posted a post and I already can think people, oh, he's giving multiple scenarios, so he's always right. But yeah, I don't care about being right about my scenarios. I just trade it. So I can say this will happen, we will touch this, and then we go up. But I think any true trader knows that that's not how it works. You can map out your PY levels. So this is a PY for shorts, this is a PY for longs, this is another PY, but it depends on how price moves into it. If price does this, then I'm not interested in this PY anymore. If we move into it with structure, then I'm interested in it. So I can give all kind of expectations. I think this is going to happen. I think that is going to happen. But it's all dependent on how price reacts and moves into those levels. So all I can do is just mark out what is my PY, where do I want to see happen anything, and then I can react on that. So yeah, if I give scenarios, always know it's not that I think that must happen. It's just a potential scenario, and I want to see how price reacts into it. So I think that for now my plans are pretty clear. If you have any questions, always let me know. You can always ask them in the comments on either X or on YouTube. And behind the scenes, I'm building on something that will be very beneficial for the people that truly want to learn more. So stay tuned and don't forget to subscribe to my YouTube, because I need 3 more subs, I think, and then I'm at 200 subscribers, and then I will host a new live stream. So if you haven't subscribed yet, make sure to do so. Thanks for watching again, and happy trading as always. Cheers.